Rohit Srivastava, fund manager, Protech PMS at Sharekhan, joining in to this conversation. Rohit, morning. Thanks so much for taking the time out today. Let's start off by getting a sense on the way the markets have been shaping out. Seen a little bit of a rebound, but it looks like we might just see exhaustion quite soon as well on that rally.
No, I'm not so sure that will happen right away. I think we need to watch this level simply because this is where we rallied from in October as well. We made the low of around 7690 just right after the interest rate cut took place, and we've fallen back to that point. So I think this is a good support level. My sense is a lot of indicators are showing that the market is getting a little oversold, and there is room for it to bounce back. Now the only question is whether it happens in the next couple of days or we just push through till expiration in the same trading range. But my sense is as long as we are holding the 7700 mark, there should be, from a trading point of view, there should be upside from here. We should probably go above the 8000 mark again. It's possible we even stretch as far as 8200 in the weeks ahead. And we should watch out for the possibility of upside rather than downside from here, because we are getting, like I said, a little oversold, and it might be the risk reward might be more favorable to being at least bullish from a trading point of view. But of course, if I take a broader market view, we are in a counter trend move which started from the bottom in September at 7500. That's still going on. I'm not so sure we've completed that structure, so that remains an open case. And in that sense, as and when it completes, once we are done with whatever upside momentum, then we'll probably see a larger round of selling. But right now, this fall shows a little strength in favor of the mid caps and small caps compared to the Nifty. So it looks more like an index decline rather than stocks falling across the board. And that gives me a sense that we are just not yet ready for a bigger sell-off in the market. And near term, from a trading perspective, we should look at the long side rather than the short side.
But Rohit, the point is, if has there been any major change on the fundamentals out there? Have you seen any major, because the earnings season takeaway also has been fairly muted, is what we've been tracking when we look at the entire quarter gone by. So the point here is, even if we see that 8,000 level coming in, does that then probably become, a zone where you once again see short sellers come into the market, shorts get active? Is that what your expectation is? Because you might see the technical adjustment coming in with the indicators getting oversold right now, but from a 2 or 3 month point of view, do you believe the markets will be able to hold on to probably above 8,000 or then start moving towards 81, 8200?
See, like I said, this is a counter trend move, which means that even if you do head to 8200, 8300, you're going to come down again. We went to 8300 last month. Few were really seeing it go beyond even 81, but we went all the way there. And then we sold off from there. So this is going to be the market, I think, for the rest of the next year, not just months ahead. You're going to see 500, 700, 1000 point moves in both directions. So as a trader, we need to be prepared for both sides of the trade. And when I say we are oversold, we are as oversold as we were at the bottom in the first week of October, from where we moved up almost 800 points. So we are at similar kind of readings when I'm looking at various indicators from put call ratios, momentum swing, and the divergences between indices. And therefore that tells me that we are just not ready to do anything bigger right now on the downside. So we should be prepared for the potential that the upside overdoes itself. While it might not look right now, like you said, fundamentally nothing has changed, but fundamentally nothing has changed for the last 9 months, and we've seen these gyrations, 800 points down, and then we've seen 600, 700 points up, time and again for the last 8 to 9 months. So I don't think that's going to change. We're going to be in that type of a market. But every time it comes down, you need to be prepared for upside. Every time it moves up, you need to be prepared for the downside. And right now the readings are telling me prepare for the upside first, rather than start looking for the downside. Because this is a trader's market. So 8,000 is looking difficult today, but by the time you actually get there, you'll start considering, the possibility of it going to 8,200, 8,300. And like I said, it might not happen this expiration because you are seeing a lot of option writing in the 8,000 strike, even some amount in 7,900 yesterday. So it's possible that that caps the upside in the very short term up to expiration next week. But overall, I think we are still likely to see first a rally and then probably a decline again later on. So right now I'm looking more for the possibility of long side trades.
So in that, Rohit, then what kind of sectors, what kind of stocks do you believe should one be focusing on?
The thing that the exercise that we run in a trading market is we actually look for outperformance and underperformance. So if the market is falling, you like to sell the underperformers. When the market is rising, you like to buy into the outperformers. So actually, if you look at outperformers, there are a handful. You take, for example, Reliance Industries. It's not really fallen with this market. So Reliance would be one stock that we would look for another potential move on the way up. I think around the current levels is where support is 920 odd, and if it does develop, it could probably surpass the 1,000 rupee mark, go to maybe 1030 odd. So Reliance would be one of the index stocks that could contribute to the upside. Another one would be Mahindra and Mahindra M&M. It's also not really fallen with the market, but actually gone up in the last couple of days. And so that would have potential to move up further. My sense is around 1250, 1240 is where the support would be immediately, and you could probably see it up to 1300 to 1400 in the weeks ahead. So that's probably the second index stock. SBI is another one which has not fallen below 61% retracement of the entire rise we saw between September and October, and after that fall it started to tick up in the last couple of days, so I think that could also do well. There are a couple of other outperformers like ITC, which has actually held out against the market over the last week or two. So essentially the strategy here would be to look for one is large cap stocks or which are outperforming. There's a very narrow list of mid cap stocks which are doing well against the market anyway, but then those would be for investors. And you try to avoid the stocks that are not really doing too well. But my sense is one particular sector that you should look at is the metal space. Now, metals has been one of the worst performers of the last year, and even right now, as the dollar index continued to move up, we've seen metal prices fall off. But when you look at metal stocks in particular, and also the sentiment in general against commodity prices, the sentiment is reaching an extreme. You follow this global survey, which gives you the daily sentiment index, and that's down to single digits in terms of bullish sentiment on most commodities like gold, silver, copper, platinum, palladium, all down to around, say, only 5% of advisors who were surveyed were bullish on most of these commodities, 5 to 6%. So when everybody is bearish on something, I would take a contrarian stance that it's probably going to bottom out here very soon and give you a meaningful counter trend move. Now, we wouldn't call it a long-term bottom, but as a counter-trend move, the metal space could continue to give you upside. So if you now, in that perspective, if you look at metal stocks, the last couple of days, last 2-3 days, you're seeing them bounce back. They've had a sharp correction, but they haven't really fallen below the September lows, whether you look at Hindalco, Tisco, or even Vedanta. So those are three major metal stocks to get your focus on. So if you just look at Hindalco, it retraced 61% of the gains it made in October, and it started moving up again. So my sense is it could probably go up to around 95 to 98 rupees. So that would be one of the weak sectors that could actually surprise on the upside. Tisco would be another stock that I would look at. Again, it would have support around the current levels. Last 2 days it's moved up and probably could go up to around the 280 mark. So these are stocks that we are actively tracking for taking long side trades right now in the market, rather than look at the sell side. If you need a further confirmation, probably we'll look at the Nifty getting past 7880 or 7890. That's the trend line channel, couple of hourly averages cluster of resistance levels there. Once we get past that, I think it would be a fair confirmation that the move up has really started, and you need to continue to build on the upside.
You've been looking at some of these agri names as well, Rohit. They've been in focus as well as what we've been tracking. When we talk about the way the sugar pack's been panning out, some of the tea stocks are recently also getting active. And any takeaway there in terms of how some of these agro-based names may be in terms of what we've seen as far as sugar and tea stocks are concerned, or for that matter, some of the chemical-based ones as well. Any trade there?
Yeah, I'm taking a fairly longer term view on this. So while we remain generally bearish on the market for the rest of the year, my sense is that, and this has been for several months, I've been observing that there's a potential for the agro cycle to turn, and I think that's now becoming more clearly visible. When you look at global agro prices, especially if you consider sugar, it has been in a downtrend for almost 5 to 6 years. And sugar stocks by themselves actually peaked somewhere around 2006 as far as Indian sugar companies are concerned. And they've been in a downtrend for almost 8 to 9 years. So I think what you're seeing is a turnaround in the agro commodity price cycle, which would include, my sense is over the coming months, you would see it spread across the commodity stocks. We've seen last year a rally in specific areas like rice processors, for example. That continues to be the case. More recently, we are just seeing the beginnings of what could end up being a turn in the sugar cycle. And if that's the case, I think we are looking at a lot more upside. This would barely be the start of a rally in sugar stocks, because they're breaking out of 7 to 8 year downward trends. So that would be a significant turnaround. And the next one that I'm looking at is in tea, because we have several tea plantation companies listed, many of them which sell tea even at the retail level. And I would look at companies which have plantation, because finally if agro prices go up, they should not be a cost for you. Otherwise you won't get the gains from the upside. So when you look at tea prices are at an all-time high. Most people tend to overlook that. You may vary in terms of what kind of benefit that accrues to each individual producer. But tea prices have hit an all-time record, so they probably turned around much ahead of rest of the other prices, and that should get your attention towards tea-related companies. One stock which I covered several years ago, and it really didn't move up, was Goodrick. It's not too much in debt. It's one of the less leveraged stocks, and it's been in a range of somewhere between 130 to 200 for almost 3 to 4 years. Once these stocks start breaking out of these ranges, then I think they would start a rally that could last for several months. So essentially looking at agro in general as a theme, wherever we look, wherever there are companies with a specific product, I think we could see good upside in the longer term. So I think the one long-term sector that I think we should be bullish on is agro.
All right, Rohit, just stay with us. Let me also welcome in Hemant Tukral from Mahindra Birla Money, who's joining in as well. Hemant, morning. Thanks for taking the time out today. Well, just a quick mention as far as the setup for the market is concerned out here. We've been looking at 2 days of gains now, but the SGX Nifty today has been indicating a little bit of a slow move, 23, 24 points down. What do you believe is the immediate outlook for the market?
See, good morning. What I can feel very clearly is that before this expiry, I do see that Nifty has formed a base around that 77.50, 78 mark. So what we are recommending people is that if we get a chance like today and fall of 20-30 points, one should go long, keeping a stop loss of 77.50 and a target of 7930 to 7950. Reason I don't see 8,000 being crossed easily in this expiry. Because 8,000 is the maximum call writing position, and I don't see any immediate short-term trigger that can help Nifty cause a huge short covering. So I think December series we may see more and more people rolling over shorts. What is interesting is December 8,000 put which has around 40 lakhs open interest, and basically this open interest has been not been formed today or yesterday. It's been from last 3-4 months. So I think 8,000 would be an interesting area when we go forward in December. So I'm slightly more bullish for the month of December. But this month I feel 7930 would be the ceiling, and 7750 on the downside will act as a very strong support.
All right, gentlemen, stay with us. We'll take a short break. We'll also be getting you top voices from the UBS India conference on the other side. The head of India equities will join us in just a bit, along with Bhanu Baveja, the global head of cross assets strategy, and Suresh Mahadevan as well, talk about telecom. Rohit and Hemant stay on to tell us more trade strategies.
is Bloomberg TV India, part of the world's biggest financial news network. Live from our Mumbai headquarters. And you are watching Street Smart Dealing Room.
Welcome back, you're watching Street Smart. This is Dealing Room on Bloomberg TV India. Just a quick check on the way the S6 Nifty is panning out, what we're tracking there. 20-21 points lower is what we're seeing so far as the indications for today's trade is concerned from the S6 Nifty at least is what we're seeing currently so far. Some alerts coming in regarding DRL as well. They've actually closed their intellectual property purchase. They paid Alchemia $17.5 million as deal consideration is what we're tracking in regard to DRL. So keep an eye on this stock as well in terms of trade today. Rohit, one space that's actually been interesting has been the pharma pack. A lot of news developments there as well. We've seen with some of the specific counters at Dishman Pharma, where you've got a little bit of overhang coming in from some of the US operations there. Stock took a beating. You've seen DRL also see quite a bit of a fall with the overhang with US FDA. And any thoughts, Rohit, on when we talk about the pharma majors?
Pharma is a pretty mixed sector because you've seen some stocks like Sun, Lupin do exceedingly well over the last couple of years. Some of them might have looked very overbought. So we are seeing a correction in most of those big names. But at the same time, it's a wide sector. There are many stocks which did not participate in a large part of that move and only started to move up recently. And that's the likes of, Cipla and Dr. Reddy. So apart from all the bad news that has really been coming out, I would actually look at these stocks which are just starting to show early signs of joining the move up in pharma. If someone has to take a longer term exposure, stocks like Cipla or Dr. Reddy or even Biocon, which is actually not participated in most of the run in pharma, would actually catch my attention more than the big ones that have actually done so, because many of them have moved up a lot and you might think that their valuations are at the upper end. So you would actually like to catch the others, because pharma somewhere seems to be a defensive sector, and whenever markets do go through a tough phase, money gets reallocated towards this sector. So you'd want to be in, have some bit of an exposure to pharma as part of your portfolio. The only question is which stocks should you be in. So probably look at those which have just started moving, rather than look at those which have moved up a lot and could be subject to some kind of near-term risk from either valuations or news flows.
All right, Rohit, fair enough. Thanks so much for taking time out today and talking to us.